Hi, my name's Nick Charnley. I'm the tax manager here at Ellis Co. Welcome to a quick tax briefing. I'd like to take a few minutes just to run through a few brief points with regards to the support schemes that have been made available by the government during the coronavirus pandemic. Firstly, I just want to run through the self-assessment second payment on account, which many of us are due to make payment of by 31st of July this year. The government have actually allowed us to defer those payments to the 31st of January 2021, along with the next round of self-assessment payments. This deferral is open to everyone who is due to make this second payment on account on an optional basis. So if you don't actually feel the need to defer the payment, so if you are in a position where you are happy to make the payment and it won't cause you any hardship, then you should still make the payment on 31st of July. However, if you choose not to make the payment and wait till 31st of January, the government will not charge any interest or late filing penalties. And of course, there is no application required because it is open to everyone. Now, while we're talking about deferral of payments, it also has been announced that the VAT payments for businesses that were due to be paid between the 20th of March 2020 and the 30th of June 2020 can in fact again be deferred to 31st of March 2021, with the payments being made at any point in that period as and when you feel that your business is able to meet that cost. Again, it's optional, so if you are able to make those payments, then I would suggest that you do so to avoid any future cash flow problems. Again, there's no application process. It is open to all. However, you are still required to submit your VAT returns as normal during this period, and as such, if you pay your payment usually by direct debit, then I would suggest that the direct debit be cancelled through your bank, whether it's online banking or a banking app, to avoid the revenue automatically collecting the payments that you wish to defer. While we're talking about VAT and payments, if you are due a refund from HMRC during this payment deferral period, HMRC have confirmed that they will continue to honour these refunds. They're not going to defer these refunds or payment of these refunds. So you will receive your normal VAT refunds in the usual way. I would say that there may be a slight delay. We're all dealing with lower staff levels and of course higher workloads because of this coronavirus. Now, there are two bigger schemes out there that have been made available by HMRC and the government to support business, employers, and the economy. So the first one, I'd like to briefly touch on the job retention scheme for employees. I believe my colleague, the payroll manager, Lisa McLeod, will discuss this in further detail in her briefing. But I'd just like to mention a few points. So the coronavirus job retention scheme was announced by the government to avoid a huge number of employees, individuals potentially losing their jobs due to the restrictions put in place to stem the spread of coronavirus. So what they've done to support those employees and their employers, they've put a scheme together whereby employees who are to be furloughed, so asked to stop working by their employer because of a lack of work or the lack of ability to perform their duties, the employers can claim from the government 80% of the furloughed employees' monthly wages, up to a maximum of £2,500, plus the employer's national insurance applicable, and the minimum auto-enrolment pension payment. So unfortunately, while an employee is furloughed, they can't complete any duties. So there have been a lot of questions asked as to whether directors of their own smaller limited companies are entitled to claim via the job retention scheme on a furloughed basis, and the answer is yes. Yes, they are. They're able to claim because they will not generally be able to continue their full duties in terms of earning revenue for the company, but they will still be able to perform their statutory duties. When I say statutory duties, I mean things like ensuring the company accounts are submitted, and confirmation statements and such. The scheme is available to all employees who were on a business's payroll at 28th of February 2020 and can be backdated to 1st of March 2020. The one thing that I would encourage employers to do is to seek advice, where possible, from a HR professional, and to keep a detailed log of correspondence, conversations, of the whole furloughing process with each employee. Now, the other big scheme along similar lines is for the self-employed, so the Self-Employment Income Support Scheme. So this scheme was launched by the government to support sole traders, partnerships, people who work for themselves on a self-employed basis that obviously fall outside the job retention scheme. To apply for this support scheme, you will have to have been self-employed in the 2018-19 tax year, have submitted your 2018-19 self-assessment. If you haven't yet submitted your 2018-19 self-assessment, you have been given a period of grace to the 23rd of April 2020, so go ahead and get that in as quickly as possible. You will have to have suffered a loss of income, and can therefore claim up to 80% of your monthly income, up to, again, £2,500, as a taxable grant. Okay, so these first payments are anticipated to be made in early June, with the revenue making contact with the individuals who are able to claim this grant from the mid part of May. They will then be notifying you of how to make a claim, and it is likely to be an online application process, so there won't be any need to queue on the phone with the revenue. Okay, to be completely eligible, you, as mentioned before, must have suffered a loss in income, submitted your 18-19 self-assessment, have traded in the 2019-20 tax year, and intend to continue trading in the current 2021 tax year, or would be if it wasn't for coronavirus, and have lost trading profits. Okay, your trading profits should be less than 50,000 in 18-19, or average less than £50,000 across the 2016-17, 2017-18, and the 2018-19 tax years. Also, the final criteria is that more than half of your income, more than half of your taxable income, should be derived from this self-employment or partnership profit. So if you do have other forms of taxable income, then your taxable profit from your self-employment should be more than all of these other taxable sources added together. If it's not, then I'm afraid you won't qualify. Currently, HMRC are using the information in the tax returns submitted for 2018-19 to identify the population who are eligible for this scheme, and they will then, once the 23rd of April grace period for submission of self-assessments has passed, they will begin contacting those individuals. So that's quite a brief sort of update on these schemes. As these schemes are new and guidance is changing quite regularly, please keep an eye on our website and follow our social media on Facebook, Twitter and LinkedIn, so that we can notify you of any announcements or updates as and when they become available. I hope you found this information useful. Thanks for listening, and please remember that the team here at Ellis Co are here to help and support you and your business through these unprecedented and uncertain times. If you've got any queries, please do not hesitate to contact us. Thanks for listening.